So today we're going to be discussing market structure. We're going to be teaching you about market structure, support, resistance, and trends. Okay, so in the previous videos on technical analysis, or the previous video on technical analysis, we talked about the support, resistance, and trend lines. Okay, so I'm going to throw more light on that. I'm going to elaborate on that in this video and make you understand how the market moves. Okay, so the market moves in three phases. It could either be an uptrend, a consolidation, or a downtrend. So there are three different phases. Okay, so let's just start by writing the topic for today. Okay, so we're discussing market structure today. Okay. All right, this is the topic for today: market structure. So like I said, the market moves in three phases. It could either be an uptrend, it could be a downtrend, or it could be a consolidation. You could also call this a range. So a consolidation could also be called a range. Okay, so these are the three major movements the market makes. Okay, so I'm going to be explaining all these. So we'll start with an uptrend first. So what is an uptrend exactly? It's when the market is making higher highs and higher lows. When the market is moving like this, because the market doesn't move in a straight line, it pushes and pulls back. Okay, so it's kind of like a step movement. So when you see the market moving like this, it's called an uptrend. Okay, it's called an uptrend. Let's change the color of this to black. All right, good. Okay, that's good. Okay, so movements like this from here to here to here to here, moving upwards, is called an uptrend. And then the opposite is a downtrend. So when the market is moving to the downside, it's a downtrend. So I'm going to illustrate that here. So when the market is moving like this, so you get the point. My drawings are not the best, but I hope you understand what I'm trying to show you here. Okay, so this is basically what an uptrend looks like, and this is what a downtrend looks like. Okay, then we have a consolidating market. So a consolidation is when the market is moving sideways. So it's neither making a move to the upside or to the downside. It's basically just pushing sideways. It's not creating higher highs or higher lows. Okay, so this is what a consolidation looks like. Okay, so I'll briefly just explain the different parts of this structure you're looking at right here. Okay, so here we have a high right here. Okay, and then we have a low in the market right here. Let's make this a little bit more visible. Alright, done. And then here we have another high, and we have a low, and we have a high again and a low, and it keeps going up. So we have highs and lows in the market. The market movement is made up of highs and lows. So this is a high, this is a low, this is another high, this is another low. Okay, so but then we don't just call them highs and lows. Yeah, they are highs and lows actually, but this is the first high that was made in the market, initiating this uptrend, and this was the low following it. Now the next high after that is called a higher high. So we can call that we can use HH to note that. So I'll just write that here. I'll just write HH for higher high. So this high is higher than the previous high. Okay, that's what it means. This high right here is higher than the previous high. So all these are higher highs. Just clone that. This is also a higher high right here. and this is also a higher high, and it keeps making higher highs in an uptrend. Okay, so you keep getting higher highs in an uptrend. This as well is a higher high, and lastly this is the last high. You can see that here. So this is the first high. It creates a higher high, another higher high, and it keeps going, creating higher highs and higher highs, and it keeps going upwards. Okay, now this is a low. This is the first low that was created in this uptrend, and then the next low is higher than the previous low, so it's a higher low, and we're going to denote that with HL for higher low. Okay, so I'm just going to write that here. Okay, HL for higher low. So that goes to show you that an uptrend makes higher highs and higher lows. You can see this is a higher low, and the next one after that is also a higher low. So clone this and put it here. That's a higher low. Clone this as well, put it here. Another higher low, and it keeps going like that. As long as the trend remains upwards, it keeps creating higher highs and higher lows. You can see the higher highs and higher lows, and the market keeps going up. Okay, and that's because the market does not move in a straight line. It moves like kind of like a step. It keeps going up down, but the overall movement of the market is towards the upside in an uptrend. Okay, so I hope you understand that now. So like I said, the market pulls up, creates a high, creates a low, breaks the previous high and forms a higher high, and forms a higher low, another higher high, another higher low, and it keeps going up like that, like a step moving upwards. Okay, so that's how to know that the market is in an uptrend. It's actually very easy to denote this. Okay, so now the opposite is the case in a downtrend. You can see that the market created a low, the first low, and then created a high, and the low after that is lower than the previous low, so it's a lower low. So we're going to use LL to denote that. So you can see that this is a lower low, so LL. So we have a lower low here. Let's just make that go away. Okay, so we have this lower low, and the next one is also lower than the previous low, so it's another lower low. So we just clone this and bring it all the way down here. So we can see that we have a lower low as well, another one, and the next low after that is also lower than the previous one, which is also a lower low. Okay, and the next one after that, and it keeps going like this until the trend changes to either a consolidation or an uptrend. You understand? So it keeps, as long as the market's in a downtrend, it keeps making lower lows and lower lows and lower lows, and it keeps going down. Okay, and then we can see that this is the high that was created, and it created another high, but this high is lower than the previous high, so it's a lower high. You understand? So we're going to denote that with a LH, showing lower high. Okay, so just write that here, LH. So we can see that this is a lower high, LH. Let's bring that down. Okay, so this high is also lower than the previous high, so it's another lower high. So we can clone this and bring it down here, so we can see that this also is a lower high. So a downtrend comprises of lower, this is the first low that was created, and then a high was created, and then a lower low, a lower high, a lower low, a lower high, a lower low, and a lower high, and it keeps going just like that until the trend ends and decides to change direction. But in the case of a consolidation, this is what we have here. So the market is neither creating higher highs or higher lows, or lower highs or lower lows. You understand? The market is just creating equal highs and equal lows relatively, because they will not be perfectly equal, but relatively equal highs and equal lows. You can see that this high is almost equal to this high and almost equal to this high, and it keeps going like that. Same thing here, the low is equal to this low, and it keeps going like that. So there are no higher highs, no higher lows. They are equal highs and equal lows. So we'll just write that down. We'll denote these equal highs with with EQH, showing equal highs. So I could just write that out. Okay, so we have equal highs, and right here we have equal lows. Okay, so that's what a consolidation looks like. It's equal highs and equal lows, and I'm going to show you guys everything I've explained here on a real life chart. So you can see that this market structure is, this is an uptrend, this is a downtrend, and this is a consolidation. This is exactly what I told you guys, that the market moves in three phases: in an uptrend, in a downtrend, and a consolidation phase. Okay, and I've shown you guys all what they look like theoretically. Okay, but I'm going to show you guys on the charts so that you can also see what I'm talking about. Okay, so this is a chart on Euro USD on the daily time frame, and you can see that this market is pushing to the upside. So this is an example of an uptrend. So I'll draw out the illustration I gave earlier of an uptrend. So it moves in this fashion. Okay, so this is exactly what an uptrend looks like, and you can remember this is a high, this is a low, this is a higher high, this is a higher low, this is another higher high, another higher low, another higher high, another higher low, and the last higher high. So it keeps going up like this until the trend decides to change, either into a consolidation or into a downtrend, and I'm going to show you all of that on the live chart here. Okay, so now look at this, look at this trend. So this is a low created right here. You can see this low was created right here, and then a high was created as well. Okay, and then what happened next? A lower low was created, and this is a higher low, and this is a higher high, another higher low, another higher high, another higher low, another higher high, and it keeps going like that: higher low, higher high, higher low, higher high, higher low, higher high, and then this overall swing here creates a higher low and then a higher high. You can see that the market is beginning to change direction here. So it now goes into this stage. So this stage right here is a consolidation. I don't really want to talk about this yet. I want to go ahead and explain this uptrend to you guys so you understand what an uptrend is, what it looks like on the live chart. Okay, so we can see that the market was made a low and it pushed to the upside, creating this high, and then what happened? It came down, creating a low, and then it created a higher high and a higher low, and you can see that the market just kept going, created a higher high and a higher low, and then this is another higher high and this is a higher low, and the market just keeps going like that: higher high, higher low, higher high, higher low, another higher high, another higher low, okay, another higher high, higher low, and it keeps going. It doesn't stop until the market wants to change direction. Okay, so this is another higher low, and then the market finally makes the last high right here. Okay, so because of this, we can see that the market is in an uptrend, and we can use a trend line to join these lows. In an uptrend, you want to join the lows with a trend line. So using this illustration here, I want to join these lows right here. Okay, so using a trend line, I draw a line connecting all the lows together. You can see that all the lows are connected by this trend line, and for a trend line to be valid, there must be at least two lows being connected. You can see the first low here, and then the second low here, and then the third low here, and then the fourth low here. So at least two lows must be connected for a trend line to be valid. Okay, so let's do that right here on this particular trend. So we'll draw from this first low and connect these lows. Okay, so we could connect these three lows first. You see, we connect these three lows first. We can see that these three lows were connected. We could also start from here and then connect these lows as well. Okay, so you can also see that this trend line connected these three lows, and this trend line connected these three lows. Now, what is the essence of a trend line? What's the importance of a trend line in the market? Now this is, we've gone into real technical analysis. This is how you actually trade. This is how you get entries in the market to be able to trade and make money from the market. You know, all the things we've been discussing since are like the theoretical aspect of the market, but this is actually the practical aspect of the market, where you get your entry, your trade entries, and you start to make money. Okay, so now how do you now get entries with these trend lines? What's the significance of the trend line? Okay, so let's say the market was still at this point, for example. It was still at this second, it just created this second lower low right here, or higher low, sorry, right here, and it's pushing to the upside, and you've drawn your trend line. So what you're waiting for the market to do is to come back to this point and touch the trend line. And once the market touches the trend line, you want to go long, or you want to buy the market. Okay, I believe everyone knows what going long and going short in the market means by now. Okay, so if you take a buy position at this point, you can see that the market continued going up. So that's how you utilize the trend. They always say in the market, the trend is your friend. You always want to trade in the direction of the trend. And if the market is moving up, what do you want to do? You want to buy, because the market is in an uptrend. So you want to be buying at the low points of the market. You don't want to buy at the high points in the market, because if you do that, the market will pull back and you take a lot of losses. Okay, so you want to wait for the market to come and create that higher low. Once it's creating the higher low, you now enter the market. And for you to be sure of the particular point where you should enter the market, you need these trend lines. Okay, so when the market comes into and touches a trend line, you go long in the market, or you buy the market here. And if you buy the market at this point, you can see that you're going to make a whole lot of money. Okay, so the same thing happened here. Now if we draw this trend line, we could also connect these lows here. Also connect these lows. You see, it's the same thing, same exact same thing. Okay, so the market pushed up, came back to this point and created a low and touched this trend line. Now we have two taps of the trend line. We could even start from here. So it's actually three taps of the trend line. Okay, so let me make that a little bit more visually appealing. Okay, so we can see that the market started from here, pushed up, came down, tapped the trend line once again and pushed up. Now once the market has made two lows, you want to connect those two lows with your trend line. Okay, and extend it as far as possible into the market. And what will the market do next? It comes back to that trend line and pushes up again. Okay, so to make this clearer to you, this might be looking like a lot of drawing, and also to make that clearer to you, I would use an illustration to show you what I mean. Okay, so now look at this. If the market is in an uptrend and it creates a low and then a high. Okay, so this is a low and then this is a high, and it pulls back and creates a higher low and then goes up to create a higher high, and then comes back down creating another higher low. Okay, and goes up again. Now what you want to do is, once you see this kind of price action in the market, you've seen this low has been created and this low has been created, so you have two lows now that you can connect with a trend line. So you want to bring your trend line out and draw a line connecting those two lows and extend it as far as possible. Okay, so let's just extend this as far as we can. Okay, so we have our trend line in the market. Now you can see this line moving as far as we can. The market hasn't come back to the trend line, but we're using this trend line as a basis for our entry into the market. Let me just make this. Okay, good. Okay, so now we have this, we know what the trend is and we've drawn our trend line. So what exactly are we waiting for? How do we now take buys in the market? We want to see the market come down and touch this trend line again. Once the market touches the trend line at this point, this is our point of entry right here. You can see this is our point of entry. So you enter a buy position at this point. You're taking buys at this point because the market has come down to touch this trend line, and we know that we're in an uptrend, so the market is going to continue moving up. Okay, the market is going to respect your trend line and continue moving in the upwards direction. So when this happens, you see that the market would reject that trend line and continue pushing up. If the market comes back to the trend line again, you could take another entry. If you missed the first one, or if you want to enter again, you could take a second entry, and the market keeps pushing up. And this is exactly what the market will keep doing until it decides to change the trend direction. So this could be, this second touch of the trend line could be another entry point for you in the market. So this is how you find entries. This is exactly how you trade in the market. You see, so 2 entry points in the market, and that's exactly what we see happening right here in the live market or on the charts. You can see that the market created a low and then a high and then a higher low, a higher high, and another low. So we have these 2 lows. We draw our trend line connecting. We can see this trend line connecting this low and this low, and once the market came back to the trend line, it started moving upwards. So that's exactly what we want to see with these trend lines. Happened here as well. We had this low, we had this other low. There are 2 lows now. We connected it with a trend line and extended it as far as possible, and what happened? The market pushed up, came back into our trend line, and continued moving upwards. This is the kind of price action we want to see. Once the market comes into our trend line, we take buys and it keeps riding to the upside, and that's how we make money. You can see the same thing here. This low was created and this low was created, and we drew a trend line joining the 2 lows. Once the market comes back to that trend line, we take a buy position, and you can see we would have made money on this trade. Okay, so this is how you can capitalize on an uptrend. This is how you can use an uptrend to make money in the market. Okay, so I'll just write that down somewhere here. So this is an uptrend. Okay, so you could take a screenshot of this screen you're seeing here and study it. You could just study it, go into your own charts as well, and look at the price action, look at price making higher highs and higher lows. Just study your charts, look at this kind of pattern forming over and over again, and also learn how to draw your trend lines, learn how to connect the lows in the market with these trend lines, and also learn how to get entries with these trend lines with what I have taught you right here. Okay, and if you have any confusion at any point in time, you could always refer back to this video, or you could ask any of the mentors on the private mentorship group, and you'll be sorted out adequately. Okay, so next we are going to talk about consolidations. Okay, so we're going to discuss consolidations now. So I say the consolidation can also be called a range. So let's just write that down here. Okay, so we have a consolidation also called a range. So this is what a consolidation looks like basically. I'll use an illustration to show you guys before we go into the live chat. So it usually creates equal highs and equal lows. So a high is created, followed by a low, and then a relatively equal high and a relatively equal low, and the market just keeps going like that until it decides to change direction or go into a trend. Okay, so this is what a consolidation usually looks like. Okay, so consolidations like this are usually formed after a downtrend or an uptrend. Okay, so whenever a downtrend wants to turn into an uptrend, or an uptrend wants to turn into a downtrend, usually forms a consolidation first, a small consolidation before it does that. And then sometimes in the market, when there is no volume in the market, no trading volume or no volatility in the market just doesn't move in one direction, it moves sideways, and that's how you see a consolidation forming. Okay, so trends are usually formed when there is volatility in the market, or when there is volume of money in the market, a large volume of money in the market. But when there is a low volume of market which causes low volatility, then the market tends to range or consolidate. Okay, so you can see that this high is relatively equal to this high, and this is relatively equal to this high. So you just have equal highs basically, and the lows are equal as well, so you have equal lows. Okay, so I've explained this before. I'll just write that with a text: equal highs and equal lows. Okay, so you have equal highs and equal lows here. This is exactly what it looks like. It's not complicated, it's not complex at all. And let's just dive into the chart so you can see what it looks like in real life on the real charts. Then I'll show you how to utilize these equal highs and equal lows. Okay, so now we are on the live charts, we're on the real charts. You can see the candlesticks and everything. So this is what a consolidation looks like on a real chart. Okay, So you can see, like I explained in the previous illustration, a low is formed, and another low that is relatively equal to this low is formed, and then same thing. These lows, they're not perfectly equal, but they are close. You see, none of them are forming lower highs and lower lows. It's relatively equal together in the market. You can see that I made like about 1, 2, 3, 4 and 5 relatively equal lows. Same thing with the highs. You can see this high is relatively equal to this high, and this high, and this high, and this high, and this high. They may not be perfect, like I said. They may not be perfect, like I said, but they are relatively equal. These three highs here are relatively equal, and these three highs are relatively equal, and these lows right here are all relatively equal. Okay, so this is what a consolidation looks like in the market. It's not trending to the upside clearly, it's not also trending to the downside clearly. So people who trade ranges like this, they apply a phenomenon, they apply a technical analysis called support and resistance. Okay, so we're going to go back to the illustration, and I'll show you guys what support and resistance really means. Okay, so we've already talked about that in the previous video where we talked about technical analysis. I'm sure you guys went through the video, and you must have understood a thing or two about support and resistance, but I'm going to elaborate more on that in this video. Okay, so now this is what we have. This is exactly what we saw in the charts, but this is a more perfect example of that. So what is support and resistance? Let's write it down. Okay, support and resistance. Okay, so we have let's just take this out of the way. Okay, so we're talking about support and resistance now, and we are talking about it with respect to a trading consolidation or a trading range. We could also use support and resistance with trends as well. So we talked about trend lines previously. That's the most effective way of trading trends, using trend lines. But you could also use support and resistance in a trend, and I'm going to show you guys that once we talk about downtrends, then I'll put everything together and you understand perfectly what I'm talking about. Okay, so we'll talk about support and resistance using just the trading range for now, and then we'll go into the trends. All right, so you guys can see, first of all, what is support, what is resistance? They are strange words when it comes to trading, okay, especially for a beginner. Now I have a cheat code you could use to learn what support and resistance is. Okay, so just know that support is equal to floor of price, and resistance is equal to the ceiling of price. Okay, so once you know this, it's very easy to understand support and resistance. Know that support is the floor of price and resistance is the ceiling of price. Now imagine price moving as a ball, because price moves up and down all the time. And when you bounce a ball, what does a ball do? It moves up and down and up and down, just the same thing as price. Okay, so now imagine this price movement as the movement of a ball, and imagine there's a ceiling and there's a floor. Okay, so what does a ball do when it meets a floor? It bounces and starts to go up. Okay, so what does it do when it meets a ceiling? It also rejects the ceiling and starts to come down. Okay, and the motion continues like that until the ball decides to stop or something else. Okay, but in the case of price doesn't stop, it keeps going. So it could go into a trend or something like that. Okay, so yeah, it's the same exact thing. This point here is like the floor of price, and price bounced up to the ceiling. This here is the ceiling of price, and you can see price came down, came back to the floor and bounced to the ceiling again, and the motion continued like that. So whenever price comes to this point in the market, it usually bounces to the upside and starts to buy. You can see that price comes to this point and it starts to buy. Why is that? That's because this is a floor for price, and that floor is called the support level. So for you to denote the support level, we usually use in technical analysis, we usually use a rectangle tool. So you get your rectangle tool and draw from one point and connect all those lows. You want to get that level in the market where price usually bounces from as a floor, okay? Because whenever price comes back to that level, it's going to bounce off again and use that point as a floor, and you can use that as a point of entry for your trade. You could also enter at that point and take buy positions from that point. So you're learning technical analysis slowly now. You're learning how to use these patterns in the market to actually find entries and start making money, okay? So that's basically what the support is. Now the opposite is the case for the resistance, because the resistance is acting like the ceiling of price. When price comes to that ceiling, it starts to go down and starts to sell, okay? So whenever price comes to this level, it sells from there. So that tells you that this is a resistance, and you can draw that using a rectangle tool as well. You connect those points in the market. Now we have our support and we have our resistance in the market. So if price comes back to this support, we are most likely going to start buying from there, and if price comes to the resistance, we are most likely also going to start selling from there. And that's how we make money using these concepts, okay? So let's just write that this is the support, this is the support, and we have the resistance. Okay, so just put this all the way up here. Okay, so we have the support down there and we have the resistance up here. So always know that when price gets to a support level, you want to buy. Let me use equal to. So whenever price gets to a support level, you want to buy, and whenever price gets to a resistance level, what do? You want to sell, okay? So I hope that is clear. If you're confused at any point in time, you could always refer back to this video. So now we'll go back to the live chat and illustrate this on the live chat. Okay, here we are back on the chart, and you can see that this is the consolidation, which we explained earlier. So I'll be showing you guys how you can apply support and resistance here. Okay, so you can see that these are the lows, the relatively equal lows we marked out, and these are the relatively equal highs we marked out. Okay, so using what we've learned on the previous illustration, you can see that you can use a rectangle tool to connect all the lows together. Okay, so we could do that for the highs as well. So connect these highs, and then we can also connect these highs right here. Okay, so remember that this example is not as perfect as the illustration we had before, okay, but it still shows the same thing. You can see that price came to this low, to this floor or support, and started buying, came back to this support or floor of price and bought, came back down to the support or the floor and bought, came back down and bought, and each time it tapped on this support, it went to the upside, it bought. Okay, and the same thing for the resistance. When price taps at the resistance, it usually sells from that point. You can see that. So this is just like the momentum or the motion of a bouncing ball. You can see it bounces up from the floor to the ceiling and down, back to the ceiling and down to the floor, and it keeps making that movement. An oscillatory movement is what we call it in trading. Okay, so this is exactly what you do. So in the market, whenever the market comes to a support level, you want to buy from there. Whenever the market comes to a resistance level, you want to sell from there, as you can see clearly shown in the live markets here. Okay, so with that being said, you need to go and practice. Go to your charts, try and mark out as many support and resistance levels as you can see in the market, and send it to the group, to the mentorship group, and the tutors are there to guide you and correct you if there are any mistakes. And also, if you're confused at any point, you can always refer back to this video or meet any of the tutors, and they would definitely guide you and explain everything to you to clear your confusion. Okay, so with that being said, we're going to move over to a downtrend. We've talked about an uptrend, we've talked about a consolidation, and now we're going to move to a downtrend. And then after that, we put everything we've learned today all together, and let you know how you can make your entries, how you can find trade opportunities and trade entries in an uptrend, a downtrend, and a consolidation. All right. Okay, so we're going to discuss downtrend right now. Okay, so remember, a downtrend is just the opposite of an uptrend. So everything we discussed in an uptrend, if you turn it upside down, you get a downtrend. It's very simple. So I'm going to be showing you what a downtrend is and how to use trend lines in a downtrend. Then after that, we're going to put everything we've learned together and show you how to use support, resistance, and trend lines all together in a trending market. Okay, so we'll start by illustrating what a downtrend is. So we're talking about downtrend. Another name for a downtrend is a bearish trend. Okay, you could call it a bearish trend or a downtrend. Then for an uptrend, you could call that a bullish trend as well. So let's go full screen mode here. Okay, so you could call an uptrend a bullish trend as well, just the same way you can call a downtrend a bearish trend, and then a consolidation can be called a range. So you could write this down somewhere. I hope you guys have your notepads where you're noting things down. Okay, so this is what a downtrend looks like. The market usually makes lower lows and lower highs. Okay, I believe we've already talked about this, so it shouldn't be confusing at this point. Okay, so this is what a downtrend looks like. It's making lower lows. You can see a low is created, a high is created. This next low is lower than the previous low, so it's called a lower low. And this high is lower than the previous high, so it's called a lower high. And you have another lower low, lower high, lower low, lower high, and lower low. And it keeps going like that until the trend decides to change either into a consolidation or into an uptrend. All right. Okay, so now in this downtrend, we can see that there are support and resistance levels as well in this downtrend. So now remember what I taught you guys. A support level is like the floor of price, while a resistance level is like the roof of price. So anywhere price goes to and it bounces and starts to buy, that serves as a support. You can see this point, price started bouncing up and going up, so it's a support level. Same thing here, support level. Same thing here, support level. Same thing here, support level. So what does that tell you? It tells you that lows in a trend are all support levels. So anywhere you see a low, a lower low, or just a lower low, or whatever kind of low in the market, it signifies a support level because it's serving as the floor of price. Okay, and then something else you should know, you should note as well, is that support levels can become resistance level if price breaks those levels. Okay, so we can see at this point that price is a support level, and at this push, price broke through this support level and came back to it as a resistance. Now this is the roof of price, but it's on the same level as the previous support. Okay, so this is what we look out for in the market during a trend, and we can draw a rectangle denoting these levels in the market. So you can see I've drawn this rectangle, and I can extend it as far as I want to in the market. Okay, so I've drawn this level now. On the support level, you can see price broke the support and came back to that level as resistance, and this is a new support level. I can draw it and extend to the future. Okay, I extend it to the right, and you can see what happens. Price breaks through that support level and comes back to it as resistance, and this is exactly what happens over and over again in a trending market. Price usually breaks through a support level and comes back to that support level and uses it as a resistance, or in the case of an uptrend, price breaks a resistance, comes back to that resistance level and uses it as a support level. So we can see in this case now, this last low has been broken. So what are we expecting the market to do? We're expecting the market to come back to this level, use it as a resistance, and continue pushing to the downside. Okay, so this is exactly how we get entry points in the market. Also, you remember what I told you guys, that if you're trading using trend lines, you want to connect the highs in a downtrend and the lows in an uptrend. Okay, so you can see here that price came back to this trend line and sold from there. So you could also combine trend lines and support and resistance levels, so you can see how they work together in this market condition. Okay, so here we can see price came down, tapped into a support level and bought. It bounced up, okay, and then created a high and then broke the previous low, creating a new lower low, okay, which is also on a support level. And then it came back to the previous support level, but this time now is using that support as a resistance, as a roof or a ceiling, okay, and also tapping into what? Our trend line. So you can see that we have two confluences now. Price is or three confluences rather. Price is making a lower high, it's tapping into a previous support and using it as a resistance. So this was support right here, but now it's resistance, and it's also tapping into our trend line. And what do you expect for price to do when it's in a resistance and also hitting the trend line? It will sell. So this can give you multiple confluences for this trade, and you could start going short at this point. Okay, so when price broke through this support level again, it didn't bounce off the support, but it broke through it. What do we expect the price to do? It comes back to that support level, but now using as resistance, using that support level as resistance, and also hitting our trend line. So what do we expect to do? We expect to sell from this level. Price should start going down. The same scenario happens again as it breaks this low and comes back to that level, which was previously support. It now uses it as resistance and also tapping into our trend line. So what do we expect? We expect the price to sell from there, and we can take sell entries. Same thing happened here, and you can see price sold from that point. So this is basically the basis of technical analysis. This is how we trade. Every strategy is based on what I have just shown you here. Every single strategy, you understand, because you want to trade in the direction of the trend. Now this is a downtrend, you want to be a seller. In an uptrend, you want to be a buyer. Okay, so in a downtrend now, you're using a downtrend line and you're connecting the highs. If you go back in this video to where I talked about uptrend, you see that in an uptrend I was connecting the lows using the trend line. Okay, so it's the opposite for a downtrend, and in an uptrend I was only looking for buy trades. Okay, so we are back on the charts again, and as you can see, we are in a downtrend. So this is what a downtrend looks like on the charts, and you can see clearly we are making, this is a high, this is a low, this is a lower high, lower low, lower highs, okay, lower lows, another lower high, another lower low, another lower low, another lower high, and it keeps going. You can see the highs and the lows, they just keep going down. Okay, so if you want to join those with lines or arrows, you can see price formed the low, then a high, and then what happened next? Formed the lower low, and then it came up here from the lower high, came down, came back up. You see how the price moves, lower lows and lower highs in a downtrend. So this is exactly what price is doing here. So this is exactly what we showed in our illustration. Okay, so this is exactly how price moves. It's, you know, the illustration is very perfect, but this is what real life looks like. So it's not as perfect as the illustration, okay, but it's the same thing. If you practice enough, you would see these things happen over and over again. So now let me show you what I was telling you about the support and resistance thing. Okay, so we can see here, this is a low that was formed, so it's a support level, and this is a high that was formed, so it's a resistance level. And whenever we see a support and resistance level, we want to mark them out. So we can see this point here, this is a resistance because it's serving as the ceiling for price. Okay, so we've marked it out. So what else do we want to mark out? We want to mark out our support level. So we can see that low was formed, we mark it out and extend it. Then something interesting happened. So as price broke through this support level, it came back to that level, but now it's no longer a support, it's now a resistance, as you can see here. And what happened after that? it sold. So this is where you want to be entering your sales, at resistance levels, and you want to be entering buys at support levels. But you don't want to be buying in a downtrend. You only want to be selling in a downtrend. The only place you're allowed to buy is when you're in an uptrend. So you can refer back to the uptrend video and you see what I'm talking about. Okay, so when you see points of support, you can buy from those levels in an uptrend. But in a downtrend, supports are basically invalid for you. You only want to be selling from resistance. Okay, so at this point now we can see a new support was formed, and we drag it out. Okay, so if we drag this support level out, we can see what happened next. Price broke through the support and came back as resistance. So this point now where the market is using as resistance is where you want to be selling from. Okay, now another support was formed which was broken, and price came back to it as resistance, and these things happen over and over again. Same thing happened here. As you can see, support was formed, price broke through the support, came back to it as resistance. Same thing here, support was formed. This is a very strong support because you can see two lows, and price came back to it as resistance. So all these points of resistance, those are the points where you want to be selling in the market. Okay, so I hope this is really understood. You want to only be selling at points of resistance in a downtrend, and you only want to be buying at points of support in an uptrend. Note this very well, write it down somewhere so that you don't make the mistake of buying in an uptrend or selling in a buying in a downtrend, or selling in an uptrend. It's going to be disastrous for your account. Okay, so make sure you practice this. Look at these things, practice over and over again. Look at the market patterns, look at how the trends move, and all these things happen over and over again in the market. Wherever you see a low in the market, draw out a line or a zone or a rectangle and extend it to the right or extend it to the left, and you see that price will react from those zones multiple times. Okay, you can use a horizontal line. Okay, like let's try something out now. This point in the market, I'll just draw a horizontal line. You can see this point was support and he used it as resistance. So if we go back into the if we go back to the previous price action, you see that price will react from this horizontal line in the past. That's to show you that these things, the price reacts from these levels a lot. You can see price reacted from that level here, price also reacted from that level here, price also reacted from that level here. Okay, so these things happen a lot. If I keep going back into the past, you see that price keeps reacting from those levels. Here it used it as a support level, here was a resistance, and this point was also a resistance. So you see that these levels in the market, they keep price always reacts from those levels. So whenever you draw a support or resistance level, try to extend it further into the future or further into the right and wait for price to come back to it. Like you can see here, if price was still at this point and I drew my support level and extended it, when price broke through that level, I'm waiting for price to come back into that level and I'll take my trade from there. Okay, now we could also implement the concept of trend lines if that's better for you. You can see I would mark my points. Okay, this is a trend line. I could also mark from here. This is another trend line, and you can see the beautiful reactions of price from these trend lines. Okay, so we can see that this is the first touch, this is the second touch. Unfortunately, price didn't come back to this particular trend line anymore, but then we can see first touch, second touch, and what happened next. Price came back to the trend line on the third touch, and we can see a beautiful sell from there. Came back again on the fourth touch, and we can also see a beautiful sell. Even on the fifth touch, you could also see a beautiful sell. So this is how you combine support, resistance, and trend lines in technical analysis. So we've come to the end of this particular session or lecture. If you have any confusions, try and refer to this video once more, or refer to any of the tutors or mentors in the private mentorship group, and they will definitely clarify your doubts. Okay, so next we're going to be discussing time frames. In the next video, we're going to be talking about time frames, so you know how to analyze the chart using multiple time frames. See you in the next one.